Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 27th of March 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off as ever with a look at the overnight changes and price moves to be aware of. One or two moves of note to bring you to your attention. First of all, the British pound slipping again against the US dollar, down by 0.19% against the US currency in trading yesterday. But there were bigger moves in the Australasian currencies. The Australian dollar falling back by 0.45% against the greenback, but it was near neighbour New Zealand that saw the biggest falls, with the Kiwi down by 1.54% against the US currency overnight, and we'll come on to the reasons for that a little later in the video. The dollar was also making gains elsewhere, gains against safe havens, in fact, including the Swiss franc, where the dollar added 0.16%. Not the biggest one-day gain, but it's part of a wider trend. The dollar is up by 0.36% against the Swiss currency over the course of the last 7 days. Strangely then, perhaps, dollar index was itself down on the session, down by 0.17% over yesterday's trade. We can't ignore the fact also that the dollar was on the front foot once more against the South African rand, adding 0.36% to its recent gains, and that brings the total gains for the week for the dollar against the rand to 1.42%. Okay then, what's on the calendar? Events that may move the markets today. Well, we've already had an interest rate decision and rate statement out of New Zealand from the Reserve Bank of New Zealand, and the rest of the day is pretty dominated by central bank speeches, it must be said. At 8 o'clock, Mario Draghi will speak, the President of the ECB. He'll be followed onto the rostrum at 8:45 by Peter Prié, another ECB member, and then at 10 a.m. we shall hear from the ECB's Lautenschläger. In the middle of those two speeches, we'll have ZEW survey expectations for March out of Switzerland. We'll have a 10-year bond auction later this morning out of Germany, and then at 10:45 we'll have another speech from the ECB, this time from EC board member De Guindos. At 12:30 we cross over the Atlantic to the US for trade balance data for January, and at the same time we'll see the release of international merchandise trade data for January out of Canada. At 13:30 our final ECB speech for the day, this from ECB board member Mersch. And then at 1400, it's the release of the Swiss National Bank quarterly bulletin for Q1. Ongoing today, but highlighted here at 1930, UK parliamentary votes on Brexit, and more on that a little bit later on. And to round off proceedings today at 2350, we shall have foreign investment in Japan stocks for the week of March 22nd. Okay then, breaking news and comment that's caught my eye overnight. And first of all, the Reserve Bank of New Zealand surprised markets with a dovish tone at its overnight meeting, suggesting that a rate cut may be the next move from the central bank, and hence that sharp weakness in the New Zealand dollar. So the RBN said the latest of the world's central banks to take a step back and potentially hint at a reverse in direction of its monetary policy. Meanwhile, staying in Asia Pacific, profits at Chinese industrial companies fell at the fastest rate for a decade, when they dropped by 14% year over year during January and February, data showed this morning. State-owned companies saw an even bigger decline in their profits during the period, down by as much as 24%. Now, there may be an element of seasonality in this data because of the timing of the Chinese Lunar New Year. Nonetheless, it's quite a concerning headline, and markets will be on the watch out for any hints of whether that's just a one-off or whether that's a continuation of a trend going forward. UK MPs will start to vote today on a range of Brexit alternatives. The votes are not going to be binding, but rather they are aimed at identifying a consensus about what to do next, and this process could take a number of days. I'm not sure that any of the alternatives will be the final solution, and it may be that MPs find they've got little choice but to vote ultimately for Theresa May's Brexit deal, but it would be an interesting process and a voyage of discovery for all of us. Okay then, food for thought and something to take away with you into the trading day and beyond. Why not think about this? There has been a lot of talk recently about the changing shape of the US yield curve, but what does this really mean? Well, in a growing economy, the yield curve that is, slopes upward from left to right as markets anticipate a rise in cost of money. But in a shrinking economy, future interest rates move lower than the near-term rates in expectation of interest rate cuts from the central bank. That's trying to stimulate growth or stave off a recession. So the chart to the right hand side here, it shows us the spread between 10-year US Treasuries and 3-month bills, so short-term and long-term government debt. Normally the 10-year paper would be expected to trade at a premium as far as a yield's concerned to the 3-month paper, but as we can see, that's not the case currently. It's been trending lower, this spread, and more recently has moved to neutral and even into negative territory, i.e. 10-year Treasury yields have been at some points lower than 3-month bills, suggesting that interest rates in the future could potentially be cut, and that in the past that has been an indicator of an impending US recession. Will it be so again? It remains to be seen, but that's what people are talking about when they're talking about changing shape of the yield curve. Okay, it's risk warning time. Please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative, and do take the time, please, to read this risk warning thoroughly, as I say. Thank you very much for your time today.